Hi, what we're going to do in this video is we're going to talk about how to give yourself an edge in trading. Now, a lot of you will have MetaTrader, and it's a really good platform for using in trading. It's free. A lot of companies supply you with a demo, and this gives you the opportunity to actually try out some ideas that you might have on trading. So what I've got up here is I've got a Euro JPY chart on a 1 hour basis. Now a lot of people will bring up the MetaTrader screen in a standard function, but the first thing you want to do when you're trading is you want to put probability on your side, and that means trading in the direction of the trend. So let's look at this chart and ask ourselves which way this chart is going. Well, it's starting at the bottom left of my screen there. Let me just change that to green so we know that this is an uptrend. And so that's been the uptrend. So what we know from past price movement on the hour chart is this market has been in an uptrend on an hourly basis, and now we're moving in a downtrend, or really we're moving in a sideways market. This is sometimes called a consolidation. So I'm going to color this one red, because just by doing those two simple things you actually know where you are in this market. Well, we're in a consolidation and we're going sideways. So there's one indicator which you can use in sideways markets, and that's stochastic. That tends to work quite well in a sideways market. Now, if you don't want to bother figuring out which way the market's going, there's a really simple thing you can do. So what I'm going to do is take off the grid. So we just remove the grid there, and I'm going to insert one moving average, which is a 200 period moving average, and we're going to color it blue. And what you'll see from this is you'll see that our green line that we drew there, which was indicating that this market was moving up, you can see that the 200 period moving average acted almost like a dynamic trend channel to the upside. At this point here, we broke hard through the moving average and we came up and we tested it. Now we've gone through it a little bit, and a lot of people will say, well, it didn't stop exactly at the top here. Well, it doesn't have to. That moving average is to give you an idea which way this market might be going. In a strong trend, price will have the tendency to stay above your 200 period moving average on the hourly. In a sideways market, it will often go through the center. The price will move either side of the 200 as it moves, and that tells you that you're in a range. Now, there's different strategies that you should trade a range with, or a trend. So when a market's in a range, be prepared to draw two lines like I've just drawn there, and trade the bounces from one side to the other. You don't know when that range is going to break out, but if it does break out, the tendency will be for you to get stopped out at the point it breaks out. So what I'm going to do is just move this range across a little bit. Okay, so we can see that range pretty clearly, and there's one thing that we can see about that range, and that range is approximately 200 points deep, which means that if you were buying at the bottom of this range down around here and you were selling at the top of this range, you would expect to go for about a 200 point target. So just using a simple 200 period moving average, we've already told ourselves an awful lot about the market without having to go through the complex task of drawing trend lines. Of course, in trading, I use trend lines all the time, but I've had over 6 years experience of trading the markets, and that's very hard for someone who's starting out from the first time to accurately draw a trend line. So, applying a 200 period moving average, EMA on the close, doesn't even matter if it's simple, it will tell you a lot about the market's condition, and from that you can formulate a trading strategy. So that's one piece of information that you've given yourself about the market, and that is, which way is this market going? Is it going up? Is it going down? Or is it going sideways? So that's really, really important. And the thing is, you won't know what the future will bring. You won't know when this market decides to go on a trend again. Some news announcement will come out which will change market expectations. But you don't know which piece of news, and you don't know when it will come out. All you know is at the moment this market is moving either up, it's above the 200 period moving average, or it's moving sideways, it's moving between the 200 period moving average, or it's moving down. It's underneath the 200 period moving average, and that's a very important piece of information. Well, I hope you like that first introduction to trading and actually figuring out the direction of the market, because that's what you've done. And in fact, you can do that on any market. It doesn't matter what it is. Now, the 200 period moving average is a very good moving average for the hourly, the daily, or the 4-hourly chart. It doesn't matter what chart you apply it to. Traders across the world are watching the 200 period moving average as their barometer. So it's an important moving average to have on your chart, and it's one that I suggest, especially when you start out in trading, that you absolutely put on your chart. If price is below the 200 period moving average, I would have a tendency to look for sell trades. If price is above the 200 period moving average, I would have the tendency to look for buy trades. So let's see in this example what I would do. Well, what I would do is I would look for sell trades somewhere around this trend line top here. Now, it could be that price doesn't come right up to that trend line and touch it, so you might sell within, say, 10% of that trend line. So you might sell in that sort of level, and you might buy in this sort of level. And that is a great trading strategy. We can already see that just dropping those trend lines just a little bit together has allowed us to pick a high probability area for a turn. Now, sometimes the market will blow through these points. So where should you place your stop? Well, in my course about risk management, I talk about you having to take 2 times risk to your reward, which means if you're risking 20 pips on the trade, you should aim to make at least 40 pips. So just measuring the distance of this channel, which is my profit target, and putting it up here, I can see straight away where I should put my stop. Putting my stop up there, and if I get in at the bottom down here, let's just squeeze that chart up a bit. Let's say that we buy in around here, and I put my stop down there, has instantly told me if I want to trade that width of that channel, what will my stop be, in order that it doesn't get hit, because it might just pop outside of that channel edge and try to take out a couple of stops. Now, we know it's trending down. We don't know how long it's going to trend down for. All you can do with technical analysis is anticipate that the future direction will be based on the past, and that's all technical analysis will tell you. Well, you can see that we've already formulated a very, very simple trading strategy from a moving average and a couple of pairs of lines. And that's something that you can do in your trading. Trading is not complex, but you have to have experience and you have to have someone show you the way. I cover an awful lot more topics on my site, forexplanet.co.uk, and you can come along. I've got a trading room, and I've also got a trade copier service. If you're interested in any of those or my trading course, please do pop on. But you'll find an awful lot of free material that I'm actually going to put onto the web for nothing, because I think that traders like yourself need to be educated, because without an education in trading, you will lose your whole account. I guarantee you that. Well, I hope you like this little video. It's very simple, and it's going to give you the rudimentaries knowledge that you need to have before you enter into the trading market. Well, good luck, and I'll talk to you soon.